So while price is bullish, while there's a bullish bias to price, what direction should we be going in? Should we be going long or should we be going short? Right. Okay, fantastic. Yeah, Mike, use the 10 for much more opportunities. Yeah, I mean, what you guys have to remember is that you can throw in other moving averages, 10, 20, 50. I understand that. But the institutional moving average is the 200 moving average. Okay, so hedge funds, institutions, banks, they all use the 200 moving average because, yeah, simple moving average, because it gives a much longer bias to the price action. Okay, now if I go back to before the internet, was all calculated by hand. Everything was calculated by hand. But because of the internet and because of ease of access to the market and ease of access to lower timeframes, private traders have adopted this intraday approach to trading. When in fact, and for that reason, there's a lot more people who are unsuccessful at trading. Whereas before the internet, where everything was much slower and much more thought out, there were less people losing at trading because there was a much more methodical approach. And that's what we need to be doing as private traders. What we need to be doing is really going back to the old school approach of trading. However, we do have that edge now of using cutting edge technology. Okay, and so this is the whole point of today's presentation. That the whole point of today's presentation is understanding that price action and these patterns and this bias in price action can last for weeks to months. And what we're looking for are these long-term trends. Yeah. And these patterns repeat themselves again and again and again and again. Now, I often hear the expression once in a lifetime opportunity. Are you guys familiar with this? Have you heard people on, the gurus and all of these guys on the news saying that this is a one-time opportunity? Yeah. Have you heard that? I've heard someone recently say on the euro dollar that shorting the euro dollar is a once in a lifetime opportunity. Right. What I'm going to do is I'm going to start on the monthly time frame. Now, the screen setup that you see in front of you is my watch list on the left-hand side, monthly on the top right, weekly bottom left, and daily bottom right. So what I'm looking at is a much bigger picture. I don't ever go down to the lower time frame. So the monthly and the weekly give me trend direction, and the daily is where I enter and where I most importantly where I manage my stops, or where I exit. Okay, so I'm going to select a few charts and I'm going to show you how these trends, these long periods, have repeated many times. And I'm going to go back to around 2007 because in 2007, that's when I started. And I'm going to show you periods where these trends have appeared on different currencies since 2007. Okay, so I'm going to start with the Aussie dollar as we're on the Aussie dollar. And you can see that actually, if we go a little bit further, the Aussie dollar trends very well. So we've got a trend from 2002 to 2004, sideways movement, 2006 to 2008, uptrend, downtrend. And then 2008 all the way through to 2012, we've got an uptrend. Okay, and most recently, we've had this downtrend here, which I have been trading. So the Aussie dollar is a good example of how these trends can appear repeatedly. Okay, let's move to the Aussie dollar, New Zealand dollar. Again, going to go to the monthly chart, and you can see with the Aussie dollar, New Zealand dollar, this really strong bear trend in 2013, 2012, 2013, which handed out a lot of profit. So the Aussie dollar, New Zealand dollar is a good example of where trends have appeared. If we go to Canadian dollar, Swiss franc, go to the monthly chart, and you can see the Canadian dollar, Swiss franc. So 2010 to 2011, nice bear trend. Then we had a bull trend, and then we had a bear trend in 2012 to 2013. And if you look at the range of this trend, it found resistance at the figure 1 all the way down to 0.8. So what you're looking at is a good 2,000 pips. I'm not going to go through too many, but I'm just going to go through examples of trends. Okay, if we go to the euro dollar, you can see the euro dollar as well, 2002 to 2005. Nice bull trend. Then we had a correction, and then 2006 all the way through to 2008, a nice bull trend. Since then, we've had short trends in this. Okay, so looking at the euro dollar, we've got clean trends that have repeated. Okay, we look at the euro Aussie dollar. Again, look at the monthly chart. If you look at this trend now, this is one of the trends that I profited very heavily from. You can see a trend from 2009, very clean trend, to 2010, and then it got a little bit choppy. But a good example of a bull trend. A bear trend. Pound Aussie dollar, bringing up the monthly chart, and again you can see clean trends. 2008 to 2010, a little bit messy, and then 2013 to 2014.